Welcome students. Today's topic is break-even analysis. Okay. In this topic, I'm going to cover what is break-even analysis, how it helps in uh, how it helps in decision making for a firm, for a company. Okay, and understanding of uh, uh, how break-even analyzed. Okay, then the formula and component. What is the formula of break-even? How it is calculated? Okay, and what all components required to get the break-even points value. Okay, and at the last, importance and graphical representation. Okay, so to begin with, what is break-even analysis? Break-even analysis is an economic concept to determine the sales volume at which company neither make a profit nor a loss. Okay, so break-even analysis is an economic concept to determine the sales volume at which a company neither makes a profit nor incurs a loss. All right. So it helps find the break-even point BEP where total revenue equals to total cost. So here the total cost is equal to fixed plus variable cost. So at this stage, there would be a situation, there is no profit, no loss. Okay. So at break-even point, the business covers all costs but does not earn any profit. So it is important for understanding the minimum sales needed. The minimum sales needed to survive in the market. To survive in the market. Now moving to the next, the formula and component. So break-even point, if you are talking about in units, is equal to fixed cost divided by contribution per unit. Okay, and the contribution per unit is equal to selling price per unit minus variable cost per unit. So in short, the fixed cost per unit. Okay, selling price per unit minus variable cost per unit. Okay, so contribution per unit. Now the components which is required to calculate the break-even point. First one is fixed cost, that means cost that do not change with production volume. If you are talking about rent, if you're talking about salary, even though there is less production, rent would be fixed and it would be charged. Okay, so it comes under fixed cost. Variable cost, it is the cost that vary directly with the production. So it could be related to raw material, it could be related to fuel or any day in day out expenses. All right, and here the revenue is income from sales. So knowing break-even point helps in pricing and cost control decision. Okay, pricing and cost control decisions. Now moving to the next, importance and graphical representation. So what is importance? So it helps managers make informed decision on pricing, production and cost control, identifies the minimum sales volume needed to avoid losses. That means what could be the minimum sales volume at which there is no loss or no profit. Okay. It is also useful for evaluating financial risk and planning. If you are talking about if you are talking about graphical representation is concerned, so at x-axis the units sold and y-axis is revenue and cost. So at the intersection of total cost line and total revenue line, it is nothing but the break-even point. All right. So that's it for today's topic. I hope you understood it. Keep practicing at your side. Do let me know if you have any questions. Please visit my Urban Pro profile. Thank you.